Mic check. Mic check. Alright, really good chat. Hope everybody had a good day yesterday. You know what I'm saying? We back at it live trading again. Added the set of 3 MBR and some EU sales. But we'll talk about that in a second. In the meantime, let me finish doing what I'm doing. You know what I'm saying? You know what I'm saying? You can catch me sitting inside. My stage strap could always keep back.
Like, get the fucking job done. Pussy. Look his ass. Kill him all.
My Jack. My Jack. My check. There we go. We sound a lot better now, so. Mike. Hell yeah. Alright, let's go.
Somebody below.
Wait, let me see if you can hear my.
You watching that yellow?
You hear my tail? Yeah, you can hear me type what I'm talking. Okay, good.
Going to this one in front of us.
This nigga playing Call of Duty, my air check. Yeah, he about to get muted, bro. Going in this house right here in front of us on the roof. Alright, let me finish setting everything up on my screens. We need a 5-minute closure below this low right over here. I'm already in this trade with low risk. I'm gonna scale in more as this 5-minute candle closure below this body's here. This was the trade from yesterday that we got clapped on. Got clapped in this position yesterday. But it's coming down again. We are in this range. Yeah, I'm not interested in trading this again, actually. We're going to take this off the watch list, put this at the bottom. We're going to replace that with GA and bring GA back to the top. Looking at GA, let's redo this GA chart as well. Let's see what we got. Let's see what we got on GA. Let's turn our EMA off. Daily time frame overall, bullish. Or overall bullish, but we in a bullish time frame retracement. We're in between this high and this low. We just broke this low here. Looking on a 4-hour time frame, we are bearish on the 4-hour time frame, bearish below this structure shift here, which was the start of this push. We just adjust this like so. Bearish on the 4-hour, bearish on the bullish on the daily, bearish on the 1-hour. Alright, so bearish on the 1 hour, this is my most recent lower high. On this 1-hour chart, this is my most recent lower low. On this 1-hour chart, we are in a 1-hour retracement phase. Inside this 1-hour retracement, we have price at this fib level. At this fib level, we do have a level of resistance right over here. We have a level of support right down here, and our previous level of support sitting right here. So you could just trade this free break and retest, right? That's very simple. And we can look at this as well. I like to sell idea versus buys. I don't want to buy to the 4-hour shift bullish. That doesn't happen to all the way up here. So no buys in sight at all. So GA. I don't know if I like this idea too much though. So we're not going to bookmark yet. We're just going to keep it up there. Let's put EU on top. Look at GBP JPY. This was a breakdown from yesterday. Let's redo it because the one I had didn't get respected. Looking on a daily time frame, we are definitely bullish. We just made a new high sitting right over here. This was the start of the push that took out this high. So we were in between this low and this high inside this consolidation range. Daily is overall bullish. Looking at the 4-hour time frame, we are bullish here as well. We're in the 4-hour retracement. We are bullish until we re-break this low. So this is where we can have some sells at. Other than that, looking on the 1-hour time frame, we are bearish on the 1-hour time frame. We are creating clear lower lows and lower highs as price trade to the downside. I want to say we shift bullish on the 1 hour as price break back above here, but trading above this range, we have a small range to trade, really choppy, not too much clean candles. So you can take some risky buys in here or some cleaner buys above here, being this being the better opportunity. And like I said, sells below this 4-hour structure shift right down here. And for this buy side, we can look to target these highs up here. Very simple. And we can look to target this as well. Actually, we're going to use this one. There we go. I like this, but this doesn't look like something that's going to happen tonight. Gold is still in the same range since Monday. As you can see, Monday, this was Monday's price action. We just consolidated here from Monday all the way down to Thursday. So gold is something I definitely don't want to trade. Let's throw this at the bottom. I don't want to trade this either. We're going to leave this at the bottom. AU, like I said, don't want to trade AU either. Same with yesterday. Leave it at the bottom. So these are my three that I don't want to trade at all. NZD/USD. Okay, we're breaking out of this lower time frame daily range, so we might have a trade on NZD/USD. All right, daily time frame is overall bullish. We're in the daily retracement phase, but we're breaking out of a tight range to the downside. On the 4-hour time frame, we are bearish. As you can see, price took out this higher low right over here, giving us this lower low, lower high, new lower low. This is the start of the push, so we're in between this high and this low right over here. We can actually just drag this down and mark it up with these lows here. 4-hour is bearish. Looking at the 1-hour time frame, we're bearish as well. We had this break and retest for 1-hour fib level retracement. Inside this retest, we had 1-hour internal structure where we had another structural shift here on a 1-hour time frame. So for sales on NZD/USD, we can wait for a retracement on this 1-hour time frame back up into this fib level or this level of support in this case. So we have some potential sales here, and other than that, we can have some potential sales down here, but I really don't want to take these sales just because this is an aggressive push that needs a pullback. So I really don't want to take these sales. We're going to take these off and we just focus on these sales here. That's NZD/USD. That's not something that's probably going to happen right now, so we're not going to put this at the top either. And now we're on to Euro/JPY. Looking at Euro/JPY, daily time frame overall aggressively bullish, but we need a daily retracement, so we might be able to get this retracement right about now. This is my most recent high. This is my most recent low that created that high. Go to the 4-hour time frame. Looking at the 4-hour time frame, we're aggressively bullish as well. We have this same high. Now this is the low that created that high right here. So now we're in a 4-hour retracement phase. Draw a fib from this low to the high. We are projecting off of this fib as 1-hour fib, 4-hour fib. Looking at the 1-hour time frame, we are bearish though. So 4 hours bullish, our 1 hour is bearish. This is where we had to shift the structure to go bearish. On the 1-hour time frame, as you can see, after price shift the structure, you see we have a lower low, lower high, lower low, lower high, lower low, lower high, lower low. A 1 hour is bearish as long as price stays below this lower high. So we can have buys here, pro trend to the 4 hour, and being pro trend to the 1 hour as price shifts structure to go to the upside above this level. Then we could look to target these highs here or these level here. You either have buys here or buys here. These buys are more risky. These buys look a little bit more cleaner just because this is a tighter range. We have multiple rejections to the upside and downside all within the same area. Other than that, that's what I think about EU. I like this setup more than GJ, to be honest. Wait, let's go back to, did we ever get a 5-minute closure? Okay, no 5-minute closure just yet, so no scaling just yet. I forgot. Alright. Looking at GA. Oh, I already did GA. GJ already did GJ. Everything looks trash, honestly. Everything looks completely shit. Only thing that looks good was the EU position that I'm in now. GA looks shit. It doesn't look too bad, but it's like a C-rated setup so far. Well, it's definitely pro trend, but where price is currently at is C-rated, something that's look like it's not going to happen because we're aggressively pushing up. But if price does decide to flip back down and start closing below these lows here, the quality of the setup will increase. But as of now, not the best. Fucking GJ trash. Not something that's going to happen like this session. GBP USD. Oh, I didn't do this one. This was my trade idea from yesterday. We're breaking retest over here. My price didn't even pull back to where I wanted it to. It stopped right here. So this could have been a trade idea, but I expected a deeper pullback than that. So I missed out on that sell, which is fine. Let's do GU now. Redo the chart. Start off on a daily time frame as I always do. Daily time frame is overall bearish now. So we were bullish. We had this higher high, higher low, higher high. Prices now come down to take out these lows here. So now our daily is shifting into bearish structure. This is the start of the push that created that market structure shift to go, or that change of character to go bearish below this level. We're in between, now we're in between this high and this low. Looking on the 4-hour time frame, we're bearish on the 4 hour as well. As you can see, we have equal highs, higher low. Price took out this low and this low as well. Then we had a break and retest of this overall low here. 4 hours bearish. Now we have a lower low, a lower high, a lower low. This lower high will be the same as on the 1 hour. So if price could re-break this high up here, we could have some potential buys on GU. The 4 hour and the 1 hour both be bullish at above this area, and this could be a potential start to a daily retracement after a daily having a shift structure here. Looking on the 1 hour time frame again, we have internal structure with a higher high, higher low, and higher high. This is where the internal structure shift bearish. Inside of the internal structure shift, we have this level of support here that previously got a break and retest. Now price is giving us another break and retest of this low here. So some potential sells here on GU. As the 5-minute time frame give us this higher low, higher high, higher low. This is a shift in structure. We already have these sells, so we could have got in here. Stop loss above this hourly candle, so it will be this hourly candle right over here, about an 8 pip stop loss. I wouldn't do 8 pips, I would have did 10 pips because I don't do random stop losses. So it would have been something like this for a 1-to-1, and then we could look to target this low right over here for our first target, and then for our bigger target, we can look to price to come into these lows all the way down here. Or these lows right here. But this is a stronger level, so I don't want to take this even though it's already happening. Definitely because it's already happened. I'd rather just wait till we get a re-break and retest of this structure point here, being as though this is a stronger level and our current previous low. But this was a nice setup sitting right here over here with this break and retest of this previous low right over here. Take our Fibonacci, drag it from the start of the bearish push to the bottom, and then we have a fib level retracement that also lines up with a 1 hour level of support and resistance in this case. But instead, I would just rather take this sell here, being as though I'm already this is already started. This move has already started, but this is a good trade idea. So I like GU. We're gonna put GU at the top up there with EU. And then I think that's it. GJ looks trash. UJ looks. Oh, this is my UJ trade from yesterday. So let's redo this chart as well. Daily time frame overall consolidating bullish though. We're still above this higher low here. So we're in this bullish consolidation. This is my previous high. On a daily time frame, this is the bottom of the range. Daily time frame is bullish. 4-hour time frame is bullish as well. We just made a new high right over here. As price closed above these bodies here, then we have a higher high, higher low, higher high, higher low, higher high, higher low, so on and so forth. This is the previous high in the 4-hour. This is the previous low in the 4-hour. This is the overall 4-hour range. Then we have a potential target here on the 4-hour for buys. So daily is bullish, 4 hours bullish. Look at the 1-hour time frame. Our 1-hour time frame is bullish as well. Price tried to come down and take out this low here. Didn't quite get it close below. Overall, leaving a big rejection to the downside. Still bullish. Just that I wouldn't want to buy in this range. I would rather wait for this range to get broken out of. That way we could trade in a cleaner range, more respectable range above all of this nonsense. Because this is overall very, very choppy. Back to the 4-hour time frame. We can have some potential sells here in the 4-hour time frame below this area, but as far as buys being pro trend, I would take buys above this area overall. Being as though we will be breaking out of these overall highs over here, and then we have clean range to fill to the left hand side to look to take out these 4-hour highs. Then even more, we can have a target of these body closes here, or even these wicks, and that's for UJ. So my top 3 for the night. Everything else looks trash. This doesn't look too bad, but it doesn't look like something that I'm going to be interested in taking right now. GJ not nowhere near where I needed to be. UJ not where I needed to be. EJ not where I needed to be. ZDUSD not where I needed to be. AU don't want to trade. GBP CHF don't want to trade. Gold don't want to trade. So we're just gonna focus on EU, GU, really, and GA for maybe New York session, but just EU and GU really. It's main 2 pairs for tonight. Let's go back to the 5-minute time frame on EU. Okay, we got a 5-minute closure. We're gonna scale in some more risk here. As price gives us the 5-minute closure. So we're gonna take some more risk here. About a 20 pip stop loss above this 1-hour high. Copy. Entry 146646. 146. 146. Oh, 14646. 146. This is my entry price. Stop loss above this 1-hour high. We're gonna go 20 pips stop loss. People might be wondering why I don't do aggressive stop loss above this high, because this is actually the push that created that structure shift on a 5-minute time frame. But this stop loss is way too tight. Price could easily just push up, still respect the level of resistance, take out this high, and then continue back down, and that'll take me out for a loss. I don't really want that to happen, so I would use my confirmation candle for my directional bias as my stop loss. Confirmation candle is on a 1-hour time frame, being as though this 1-hour time frame is the 1-hour candle that barely engulfed all of these previous candles that closed below this level of support here. So I am expecting price to stay bearish as long as we respect this previous hourly high. And yeah, the bad thing I don't like about this trade is the fact that this 1-hour candle doesn't really have a nice top wick. If you really zoom in and get to the grid, we have a very small wick here. If we had a steeper wick, that'd be a little bit better to let me know that this candle doesn't want to flip back bullish. But because it doesn't have a really decent sized top wick, price could easily just push up to make that top wick, putting me in drawdown, and then run into my direction, meaning I'll be in the trade a lot longer than I ideally would want to, depending on how far it goes in drawdown or how steep it makes for that top wick, or even price just overall flipping bullish and just coming back up and taking out this high. But either way, I'm already in the trade. Stop loss is above this 1 hour high. That I think if price breaks above that high, that invalidates my trade idea. So that's why I use that as stop loss point. And we can look to target this level of support down here alongside the trade yesterday that I took up here with a runner. Solid analysis was good, Michael. Welcome to the stream, right? I think it's my first time seeing you in here. So I'm still holding partials from this trade that I had yesterday with a runner. So hopefully we can come down to target these lows sitting right over here. Actually, I can't ignore. This is a level I can't ignore. I have to be mindful of this level as well. But everything else pretty looks like shit, to be honest. Only thing ready to watch here is EU and GU. I wouldn't trade anything else tonight. New here just showed up in my feed. Nice. What you trade, bro? You trade Forex, futures, crypto? What you trade, bro? Let me know. Talk to me. I just noticed my light wasn't on this whole time, bro. Damn. MS Micro, so you trade futures? You trade MS? Okay, okay. Personal capital or platform capital? We're working on a challenge right now. Still learning. How long you been? How long you been in the markets? This is where I want to take partials. I would want to take some partials here just because this is the previous low. Price will be making a new low if we close below this level here. So this is where I would want to take partials at, and I'll trail my stops from 20 pips to about 10 pips. I'll cut my stops in half if we take out this low. That's what I'll do. You trade ICT as well? I be seeing a lot. I think everybody trade ICT nowadays. Us support and resistance traders is running real thin. 6 months? Nice. It's not bad. It's not bad. So you know what's going on for real. You probably just got some psychology barriers you gotta deal with, probably. Paper trading? Okay, okay. So what do you think about footprint or order flow? I mean, I guess it actually footprint and order flow actually shows you how many contracts on each side, buy side and sell side. I guess that's a benefit. Basically let you know if you're on the right side of the market or not. But you don't trade futures. I trade NAS. Buy side and sell. Footprint order flow. That'll show you like how much contracts is in for on the buy side and sell side of whatever asset you're watching. But I don't really focus on order flow because I trade pure technical analysis. Is that good? Yeah, it's good, but it's not something that I'm familiar with or that I've used before. I know how it works, or I get the idea behind it, or the ideology. There we go. Hold on, let me cook. But um, not something that I've used, not something I'm looking to use either. It'll just show you who's more in control or who's taking over, like buy side or sell side. But as price is moving, those contract sizes will change based off of like sellers getting out or buyers getting in. So at any given moment, I think if there are more sell contracts than there are buy contracts, and you think sellers are in control, and then as you getting in for those sells, the sellers are actually getting out, could potentially possibly be getting out, and more buyers are getting in, and that'll unbalanced order flow would be a change in direction. That's a possibility. So just tricking the trade based off of knowing that there's more sellers in on any given candle versus more buyers being in on any given candle is, I think that part of it would be flawed to me. So I wouldn't even consider it. That's just me personally though. I've seen a lot of people that use order flow and footprint chart, which is, I mean, good, I guess, because if there's a lot of people using it, then it's probably working. Like Lambo Raul, I watched a couple of Lambo Raul videos that he was explaining it, but that's not something that I would be interested in. Do I trade futures? Yeah, I trade DAS 100. So basically, the way I trade is, I trade Forex, gold, and NAS 100, and on any given day, like when I open up my chart to trade, I break down everything I trade in order. So all these pairs you see on this watch list here, I break down all of those and see where do I want to buy it, where do I want to sell at, based off of where price is currently at. And if price is near my areas, then that's the asset I'll focus on for that day. If price isn't near the area where I ideally want to actually take a trade, then I just put it to the bottom of my watch list. I only focus on 2 to 3 pairs a day. So in this case, gold and NAS is not something that I actually want to trade because those charts look trash. So I'm really focusing on EU and GU today. Y'all might know a lot of other traders or a lot of other people on YouTube that tell you just trade one thing or 2 things, whatever the case may be, and to master those things, right? That is a good idea. That's what I used to do, but I found that really flawed for the simple fact that I found myself taking lower quality setups because I was thinking that would be the move of the day, and that was the only thing I was trading. So I used to just strictly trade gold. When I was strictly trading gold, I found myself taking C-rated setups and D-rated setups just because I've been on the chart for 4 hours straight, coming on at pre-running and it being 5 a.m. And I'm like, bro, I didn't get a setup yet. Maybe this is going to be the move of the day. And I finally see a weak breakout. And I found myself taking those weak rated setups or those lower tier setups just because that was the only asset that I trade. And I would think that's the move of the day. And then I was taking unnecessary losses that way, knowing deep down that I shouldn't even be taking that trade. So to combat that, what I started to do was implement more pairs to my watch list and focus on the quality of each setup versus what's being the move of the day, and for that pair, and just really focus on the quality of each setup. So if something is lower quality, I'll just look at something different based off of these pairs to my right on my watch list. That's just me personally and my experience with just trading one specific thing or 1 or 2 things. Like you may see, like hypothetically speaking, say I only traded GA and GJ, right? Well, that's the bad example. Say I only traded AUD, USD, and GJ, right? Both of these pairs look trash to trade for me. Like I wouldn't want to sell because it's selling this counter trend, and I only would want to buy. So in order for me to buy, I need price to have a structure shift because sellers are in control now. But hold on, I'm talking too fast. Let me slow down a little bit. So right now, sellers are in control for the time being, but sellers are in control on the lower time frames, but the higher time frames are bullish, meaning buyers are in control. As you can see, the 4 hour, we just made a new high. See, on the daily time frame, we just made a new high. So this is just a retracement of a higher time frame bullish movement. I don't want to trade counter trend to overall aggressive bullish push, and this could just be a pullback for a continuation to make a new high. All right. So with that being said, I would want to look for buys. But just because I know I want to look for buys, don't mean I want to buy at any given time. I don't want to buy while the market is already still being short-term bearish. So in order for me to buy, I need to wait for that short-term bearish momentum to die out, to go bullish, alongside with the overall high time frames being bullish itself. That's how I get my buys, right? So if I have a daily bias of, a daily 4-hour bias of both of those time frames being bullish, my 1 hour is bearish, I won't necessarily take the 1 hour sales. I'll just wait for my 1 hour time frame to align with the overall 4 hour daily time frame. That way I'm taking a higher quality setup, means though I have more time frames in sync with the directional buyers. And then after that, it just comes down to entry, stop loss, and take profits. So with that logic, I don't want to sell because that's counter trend, and I don't want to just buy right now because this is overall seller still in control. As you can see, this is an aggressive drop. In order for me to buy, I have to wait for this bearish momentum to die out, and that doesn't happen until we break above this lower high or break above this lower high here, right? And based off where current price is, this lower high and this lower high are far away from price. So ideally, I won't get a trade on this today. But if this was something that I was only trading, I would probably be trying to take these stop sells because I'm in my head like, okay, this is the move of the day because we're overall bearish of the day. So now I found myself taking a counter trend trade, ideally when I know I shouldn't be taking sells in the first place. Or say if I traded AU, like GJ and AU, right? And AU looks terrible. This is overall consolidation, right? I'm not going to do a whole AU breakdown because I don't feel like it. And this is something I already know I'm not trading, right? So if AU looks trash and GJ looks trash, but these are the only two pairs I trade, what trade do I take for that day? I would have to take one of these trash pairs or these trash setups, even though I know that that's something I don't really want to take. So to cut that out, I just added more stuff to my watch list and focus on the quality of it and not just being in any given setup. But now we have an aggressive drop on EU coming down to my first take profit being this previous low here. I'm looking to take off some partials and profit. This is a very fast trade actually. This is 1 hour candle. Not gonna take partials yet. Just wait. I just want price to hit this price target here. Then I'm gonna take some partials and I'm gonna tell my stop loss from 20 pips to 10 pips. That way I'm taking off partials and profit. I'm cutting my stop loss and minimizing my risk. And now my stop loss will still be in the area that invalidates the trade I did because I'm overall bearish. If price comes down to make it equal low or break this low, this will confirm this to be my most recent lower high, meaning as long as price stay below this lower high, I'm technically still right of my bearish direction. So price shouldn't take out this high. If price does take out this high, I'm going to be outside of this trade. So if price takes out this high, I'll get out this trade. And I already took partials here, and I'm just anticipating that price could just keep filling the rest of this range to the downside. I want to see how these 5-minute candles are looking. The reason I say that because it looks like we're making a bottom wick to these bodies here. I don't want these bodies to get rejected and then price start to trade back because this technically this is still an equal low. So I look want to take partials now, but I also don't want to cut them too early as well. Like, I really want to wait for this wick to get taken out. But this is something what we call unrealized P&L, right? If I take partials right over, if I take partials here instead of here, it's only a 2 pip difference. So it's not really a difference in taking partials, like as far as dollar amount wise, but I take it a little bit early. So I'm open to taking partials now. That's actually what I'm gonna do. I'm not even gonna wait for it to get taken out. Just because this unrealized P&L difference is not even gonna be a big difference with 1 pip taking partials now versus taking it when it actually takes the low. If I'm talking too fast for y'all, bro, let me know, bro. So I'm gonna close half my position here and trail stop loss and let the rest of this position run. We're gonna go 10 pips from entry. Boom. Copy. And boom, stop loss has been trailed. Took partials already, and we can let the rest of the trade do what it do. For price to come, my second target will be this support level here. Looking left, we have previous support here. I don't know if this range is going to, this is a weak level. It's a level not too strong, right? But at the same time, just because it's a weak level or it's level not too strong doesn't mean it won't get rejected. So knowing that, this is where I'll take partials at next, which would be at like a 1 to 1 point, a 1 to 3 risk reward based off my stop loss now from where it currently is. So I have a runner from this position and I have a runner from this position as well from yesterday. So this is my trade yesterday. Almost got stopped out here, but price overall ended up taking out the low as I expected it to. I have a runner from this position, and now this position was today. I have a runner on this position as well. On this position, my stop loss is at break even at this point, and here my stop loss is now cut half to 10 pips, and I'm looking to target this low, and eventually, if price could come down to these lows by the end of the week. For this is a very strong level of support here. This is a weak minor level. This is a weak minor level as well. This is my really strong level down. I'm thinking the market is going to come down, take out this low, then maybe make some relatively equal lows down here. I master ICT price action, order flow, SMT, footprint, technical analysis in IRL, ICRL, etc. The question is, I can't take 100% from crypto. I'll always get out on 60%. What is your opinion? Where have I been the last 6 months? Hey man, unmotivated to post content. To be honest, like I still been trading. Like I trade every single day, but unmotivated to post content. But I'm trying to get back to as consistent as I used to be. I master ICT, price action, order flow, SMT, footprint, technical analysis, IRL, ICRL, etc. The question is, I can't take 100% from crypto. I always get out 60%. What is your opinion? Well, why can't you ask yourself? Why can't you take 100% from crypto? Why do you always get out 60%? That's a psychology barrier on yourself. If you have a full target and you close your profits 60% before it gets to that your full target, 60% on the way there, then that's a psychology barrier on you. But I also think you master too much stuff. The more complex your trading is, the harder it is to trade. Having too much, knowing too much is a double-edged sword when it comes to trading. I have fear. Yeah, that's personal though. If you have fear of holding trades, just set your TP, set your stop loss, and walk away. And whatever, set alerts at that stop loss or TP. Like set alert at your stop loss. Say position stopped out. Set alert to TP hit. Walk away and don't look at your computer again or your chart until one of those alerts get hit. Then you don't have a choice but to hold through those stop loss or those TPs. But I also think you mastered too much different stuff, right? The more complex your trading is, the harder it's going to be to trade. Being as though you're going to see too many contradicting things. Like you might have an overall directional sell bias, but you might see price reacting off a level of demand. So if you're looking to sell, but you see a reaction off of demand, now that's contradicting, because a demand is where you will want to buy it. Or if you looking to sell, but you see a fair value gap that supports a buy side, then that's contradicting. So making stuff too advanced or trying to be like too technical about things would actually hurt you in the long run. Like I literally trade the same thing day in and day out, no matter what price action is. I just look for the same market structure, the same price action over and over and over again. Do you use indicators for futures? I don't use indicators really. I use about 50 EMA. The way you see me break down my charts just now is literally the way I trade every single day. I use my 50 EMA, but not necessarily to enter a trade, not necessarily to take a trade, just to added confluence. But most of the time, I'm already on the direction of bias. But I'll use the 50 EMA if I'm taking any counter trend trade. So, like, say hypothetically speaking, I have a 4 hour and a daily bullish, but the 1 hour is bearish, and I take a 1 hour sell. I will make sure that I'm below the 50 EMA, even though the 4 hour and the daily is both bullish. So that's the only time I'll use the 50 EMA. The reason being is I don't promote taking counter trend trades, but I do take counter trend trades sometimes. Not often, but I do take counter trend trades. Only time I do take counter trend trades though is when I'm already significantly up on a week and we're coming into the close of the weekly candle. So if I've been selling all week and now I see my sellers pressure is starting to die out and I see we in a bullish retracement of an overall bearish market and I'm already up on a week, then I would be a little bit more risky, a little bit more aggressive and take those counter trend trades. Just risking some of the profit that I already make to try to make even more profits. There's nothing wrong with that. If I end up taking a counter trend trade, being as though it's risky and lose the trade, I'm still green on the week. So I don't really mind if I take a counter trend trade and lose. But to start the week off, like Mondays and Tuesdays, Wednesdays, I don't really take counter trend trades. Being as though I don't want to start the week off in a negative, and now I'm trying to chase my profit that I already lost and make some profit to end the week in the green. So it's really situational for me to take counter trend trades, but that's the only time I really use 50 EMA is when I'm taking the counter trend trade. So you just use key levels, yeah. I basically just use previous market structure. To give you, in a nutshell, to give you my trading foundation, I'm gonna go to a clear part of the chart where there's nothing. When you first learn trading, you learn about what a bullish trend is, which is higher highs and higher lows. This is what you learn when you first learn trading. Alright, this is like trading 101, and you learn opposite for bearish market. We have lower lows and lower highs, like so. You also learn that whenever price takes out a previous higher low, this is when the bullish market goes bearish, as price does something like this. And you also learn when price goes back above a lower high, the market goes bullish, something like this, to where now we're going from a bullish market to a bearish market, or a bearish market to a bullish market, so on and so forth. I take this basic 101 trading stuff and I apply that to every single time frame. That's why I personally think my trading strategy is the easiest trading strategy to learn, because this is something that you learn and understand within the first week or month into trading, and you don't need anything else after this. The reason being is price likes to break levels and retest them to see if those levels are going to hold. So if price breaks below this low, I will look to sell as it comes back up to retest to continue down. Right? If price breaks this low, I will look to sell as price breaks below it, retest it, and continue down, so on and so forth. So these are the levels I look to trade off of. These are my quote-unquote key levels. And as far as catching reversals, and as far as catching pro trend trades, if price breaks above this high, I wait for price to come back down to retest it, to take the buy to retest the previous highs. If price breaks above this high, I wait for price to come down to retest it, to take the trade back up to retest the previous high once again, so on and so forth. So I take this concept of just price action with higher highs and higher lows, and lower lows and lower highs, and I apply that to every single time frame, just to get a directional bias. Once I have my directional bias, I trade off of the 1 hour and 5 minute time frame. So once I see hypothetically speaking, say I see the daily time frame looks like this, right? So we see a higher high, a higher low, a new higher high in the daily time frame. But inside that daily time frame, you see a 4 hour time frame that looks like this. Right? Let's make this different color, let you know that this is a different time frame. Let's make this yellow. Right? This is the daily time frame being bullish. This is a 4 time being bullish as well. Now you might say this is not bullish, this is bearish on the 4 hour time frame for the yellow line. It's not bearish. Reason why it is not bearish because you see we have a lower low, a lower high, a lower low, a lower high, a lower low. Price took out the previous lower high. Price took out the previous lower high that created this new lower low, meaning this is going from bearish to now bullish, right? So this lets me know my daily is bullish, my 4 hours is bullish as well. So my 4 hour looks like this, and then my 1 hour looks same way as the 4 hour did to the daily. Looks something like this. Make this a different color so you know it's a different thing. Let's make this red now. Okay, now my 1 hour is bullish as well. Daily being bullish, we have a higher high, a higher low. 4 hour being bullish, we creating lower lows and lower highs, and then we have a shifting structure for the 4 hour to go bullish as well. Now you see the 1 hour time frame, we have bearish structure for the 1 hour to go bearish as well as price take out the previous lower high. Right, this is what I look for. So if this is my directional bias is bullish because daily 4 hours both bullish, 1 hour just went bullish as well. I will scale down on the 1 hour time frame and look for price to come back and pull back into this previous lower high that just got taken out for potential buys. As price come down into that area, the 5 minute time frame will look something like this, and then I will just enter as price at this 5 minute, creating lower lows and lower highs. I'll wait for that most recent lower high to get taken out on the 5 minute time frame to actually get my buy entry, and stop loss below the low. Then I'll look to target the high. So I literally take the same concept on every single time frame. I take the same concept and apply it to every single time frame to get an entry. But it's also important to know how to identify pullbacks because a break below a recent higher low may just be a liquidity grab and price soon comes up. Do you have any rules for that? See, I think the whole liquidity grab phenom is flawed. I'm going to get to that in a second. I take 10 trades in this month. Most of them not hit target and just come to 60%, 70% and go to stop loss target. My 4 trades just come stop loss target, and 6 of them I get 50%, 60% of my trades. Missing something. Every trade is not going to run to your full TP. That's a part of trading, right? That's where risk management comes into play, and being able to identify when trades are getting against you, right? Not only people undermine what the small stuff that makes traders profitable, right? Having a good trading strategy is going to make you profitable. But having a good trading strategy with bad risk management will not make you profitable. Having that same good strategy with bad psychology will not make you profitable. So it's the small stuff that makes people profitable that a lot of traders don't pay attention to. So with that being said, not only do you need to have a trading strategy, which you clearly already got for yourself, but if you have a trading strategy, let me rephrase that. Not only do you need a trading strategy, you need a risk management plan. You need a strategy to enter and exit. Just because you know how to enter doesn't mean you know how to exit. That's important. And the way you exit, you need to do the same thing every single time. That way, it's overall a part of your strategy, and the results may vary. But as long as you do the same thing every single time, you should make profit over time if it's a profitable way to manage it. So, me personally, I don't care how far the trade runs. At my first target, I always take off partials. That way, I'm minimizing my risk. If I take off partials at my first target and I close 50% of my trade, and I leave the rest to run, and price starts to pull back and goes to stop loss, it hits stop loss. So what? I end the trade at break even because I already took off 50%, and the stop loss is just that remaining 50%. So I end that overall trade at a break even, meaning I lose 0. That is fine. I'm comfortable with. I'd rather lose 0 than to lose 1% or however much I'm risking. Right? If I take partials off at TP1 and it goes further, and I take 50% off and it hits my second target, now I'm up a cool 1.5% if I risk 1% on that position, just because I overall held 50% of my original position to my second target, meaning it's going to be floating 1% in profit, and I already took off secured 0.5%, total out to be 1.5%. I do that same thing every single day, no matter what price action shows. That way, over time, I'm either breaking even, I'm losing, or I'm making that 1.5 to 2% profit. If it doesn't hit my first target and it goes straight to stop loss, okay, I lost the trade. Back to Dominic. It's about how you identify pullbacks because of break and retest. Higher low may just be a liquidity grab and price soon comes up. Do you have rules for that? The liquidity grabs is flawed, right? The reason why I say liquidity grabs is flawed because the idea with liquidity grabs is price takes out a previous higher low to quote unquote grab liquidity to then go in the overall direction that it wants to go. So like say price takes out this higher low, meaning grabbing liquidity, and then it goes back bullish, right? Reason why this is flawed is because when you first, back to the beginning of trading, when you first learn trading, you learn that if a higher low gets taken out, is it no longer bullish. So if this letting you know that this is no longer bullish and it's just a liquidity grab, and then overall you are looking to buy here. You're looking to buy a bearish market. So you are overall taking a counter trend trade, hoping that it goes back into bullish structure, right? Not only that, liquidity grabs are based off of a lot of liquidity grabs would be wick rejections. So looking at this as a structure shift, I'm not looking at this as a wick structure shift. I'm looking at it as a body close. So if you have a body close below this low, this is not literally, this is not really a liquidity grab. This is a confirmation, because when you learn candlesticks, you learn that candlesticks have a open, a close, a upper wick, a lower wick, and a body, right? You also learn that wicks are considered rejections. Closures are, well, I don't know if y'all learned this, but this is how I teach people. I teach people wicks are rejections, closures are confirmations, right? So knowing that wicks are rejections and closures are confirmations, if prices close below your fair value gap, or closes below your level of demand, or closes below your supply level, or closes below your higher low, that is a confirmation that the shift in direction is, the structure of direction is shifting. So now if it's just a wick, okay, a wick may be a liquidity grab because it's not confirmed. It's getting rejected, so meaning it's not confirmed. But if price breaks and closes, that is more so a confirmation and not really a liquidity grab or a rejection, right? And a lot of flaws that people make when it comes to candlesticks that I see a lot is, say we have a candlestick like this, right, and then you have a wick like this. People may see, let's make the wick a little bigger. People may see this as the rejection when this is flawed. If you know that wicks are rejection, it's not just the top of the wick that is the rejection. The whole wick is considered the wick, not just the top of the wick. This whole thing is a wick, from the top of the wick all the way to the body. That's what makes it a wick. From the bottom of the wick all the way to the body, that's what makes it a wick, right? So knowing that these are the wicks, right? This little line right here, the top of the wick, is not getting rejected. It is getting rejected. It's part of the rejection, but this is not the only thing getting rejected. This whole area is getting rejected. Again, this is not the only thing getting rejected. This whole area is getting rejected. So that's important to note as well. So when it comes to price, quote unquote, taking out liquidity as price is breaking a low, if the break doesn't have a closure, then yes, you can see it as a liquidity grab. But if the break has a closure, then it's not a liquidity grab, and it's really just a confirmation. Yes, so the wicks is those buyers and sellers war going on, and price just leaving a footprint to where price just leaving a footprint of sand on the beach to where price has been versus where it stopped at. But a key thing that a lot of new traders overlook is the importance of wicks. Every wick is a rejection, and every closure is a confirmation. So if I just use previous price action to like show you this, right? As you can see, all right, this wick here, right? I'm gonna put a line at this wick here. This wick here, right? This big wick here. This whole area is being rejected, right? You see this candlestick here? This candlestick completely ripped through this wick. Breakout buyers here are taking buys here, right? They're taking buys here. They haven't stopped loss below these lows or whatever. They're all getting clapped. The reason why they're getting clapped is because there's no closure above the wick. If there's no closure above the wick, then that wick is still being, this whole area is still being rejected, which left a steeper wick. So even though we have a body close higher than these body closures, it closed within the rejection area. Knowing that this is overall whole area is being rejected and price is closing inside the rejection, it is still considered being rejected. That's why if you look to the right of this previous wick here, all of this is getting rejected now. Now you see, if you wait for a closure, you don't enter this trade. So you avoid taking a bad loss on a buy, and now you being patient, you will see, okay, with more price action, you start to learn, okay, now we have equal highs at this rejection area. Then we have another wick to the downside. Another wick here with this lower wick here. You extend this to the right, you see, okay, we have price closing below this high low after making equal highs with a closure. Once price closed below this low, remember I said price likes to pull back into previous areas that it once broke below. But this is my most recent higher low, and price breaks below that with a confirmed closure, meaning price confirmed close below that level, also leaving a massive 1 hour bearish gulf, and lets you know that the structure is starting to change. Now we have sellers coming into play. But you don't want to just sell yet. You want to wait for a confirmation. So the confirmation will be if price comes back into this area and reject. As you can see, price came close, didn't quite get there. So you don't trade. If the price doesn't get there, even I don't care how close price gets. If it doesn't get there, you do not take it. Because you need it to touch and reject. No touch, no entry. Same thing with a fair value gap. If price comes close to a fair value gap but doesn't quite get it, don't take it. If price comes close to supply and demand but doesn't quite hit it, don't take it. Alright, so here, I don't want, even though the sell would have played out, I still want to take this because it didn't make it to the level. Again, price eventually pushed up, tapped into this level. You could have had some potential sells here. Could have used, if you wanted to be aggressive, could have had stop loss right above this previous candle high, about a 10 pip stop loss. You want to be a little bit more conservative, to leave it overall above the level. Could have did about a 15 pip stop loss. Then you could have looked to overall target this low, and then took partially at a 1-to-1 or 1-to-2 risk reward. As you can see, price ended up running to a 1-to-1.7 risk reward. And for 20 pip stop loss, if you used a 10 pip stop loss, this would have been almost a 1-to-3 risk reward. And then very simple. Then price overall created this structure point here, and then eventually came back up to take out this high here. So, but just because this was pro trend, like I said, price. This goes back to my example with price not going to always go to your 100% TP. So this is my 100% TP, and I'm looking to take full off my position off at this level. Price is not going to always get there, right? That doesn't mean I'm wrong about the trade or am I wrong about the direction. I still hit for a 1-to-3 risk to reward, right? So it's still a profitable trade. Like 1-to-3 risk to reward is a winning trade. This is a good risk to reward trade here. So, like guys, it's not going to always create that equal low or take out that high that you wanted to take out. It's not going to always get there to the pip. Is the point of it? The way I trade is to be right about the overall direction of bias and take profits as price going to the direction I want it to, and leave runners to make extra profits as price continue in my direction. So at a 1-to-3 risk reward, say being at up almost 1-to-4, I'm taking partials here, and I'm still leaving the runner to go to my overall full target, but I overall securing as price is making the way down. That way I'm taking off money, taking off profit, taking off profit, taking off profit, taking off profit as price is dropping. Then when price decides to finally reverse, because you don't know where price is going to reverse, you just have an idea where price could potentially reverse, right? So if you know that price could potentially reverse off of will be this previous low here, this structure point where it got rejected, this is where you want to take partials off. And then if it reverses, then you know you already took partials and then you got out at stop loss eventually finally gets hit, but you took partials on the way down. That way you overall net and making profit. But that's why it's very important to notice that notice the difference between wick rejections and candlestick closures. Like for me, like, and this is a live example right here on Euro USD on the trade that I just took, right? Looking on a 1 hour time frame, this was a turning point in price. So every turning point in price is a potential rejection area. So this was the turning point in price, meaning price was bearish and then eventually went bullish. So this is a potential turning point in price. Price came down here and started to slow down, right? So when on my runner here, I took partials at this level. Then again, price came down here, had a turning point in price, started to go back bullish, right? So knowing that this area already got rejected, once price come back down to this area, I don't want to close my full trade here, but knowing that this is the area that could potentially get rejected, this is where I want to take partials at. So this is why I take partials off my position here. And then so on and so forth. If I look left to see my next partial take area, this was a turning point in price, right? Price went bullish. We had a break, a retest on the 1 hour candlestick, and another aggressive push. Knowing that this was a turning point in price here, this is where I want to take partials at down here. Or, for example, here, another turning point in price. Price was bearish. We have a level of support, aggressive push, level of support, aggressive push, right? Knowing that this is another turning point in price. If this is another turning point in price, this is another area where I want to take partials off. So as I'm trading, I partial out my position the whole way through. Like, I don't just wait till it fully hit my TP to close my trade. I partial out the whole way through. That way, if price wants to keep dropping and keep dropping and keep dropping and never giving me a pullback, I'm in that trade that whole time. It decides to keep dropping and keep dropping and keep dropping. Right, until I say, okay, I had enough. I've been in this trade for a while now. I'm comfortable with the money that I made. Then I'll close full. But other than that, I'm partialing out. So I'm partialing out here. I'm partialing out here. I'm partialing out here. If price wants to keep falling, I'll be partialing out here. If price keep falling, I'm partialing out here. I'm partialing out here. Like I partial out all the way until my trade gets watered down. Then I eventually close full, or until I get stopped out. But as price dropping, I'm partialing out the whole way through. You have to close your trade half at 50%? No, you don't have to do anything. Everything is subjective to what your psychology is and your tolerance. Me personally, I close my trade at my first. I close 50% of my trade at my first target. That's my risk management plan. Hypothetically speaking, say I'm in a buy position, right? I have a 10 pip stop loss. So I have a 10 pips I lost and a 10 pip TP1, right? For like a 1-to-1 risk to reward, right? Just for my first target, right? And say I risk $1,000 on this trade. So let's put some numbers on the screen so we can actually give you the context, right? Say I risk $1,000 on this trade, right? Boom. So my stop loss is $1,000. My TP1 should be $1,000 in profit. Then my TP2 would be $2,000 in profit, right? Something like this. So my TP2 would be $2,000 in profit. And price eventually pushes up. Price ranges, plays around, does what it wants to do. Pushes up, hit my first target. Once price hit my first target, I'm closing out half of my profit. So if I'm up $1,000 here and I close half, that means I'm adding $500 to my initial balance. So we're going to go plus 500. And so whatever my balance is, I secured $500 and I still had $500 floating profit because I was up 1,000, 500, 1,000. So now I still have $500 floating profit. Now say price hypothetically pushes up and hits my second target. Now once again I am now up another $1,000. And say price is up another $1,000. Guess what I'm doing? Taking 50% off again. I'll take 50% off again. That's taking off another 500. So once again I'm adding plus 500 to my initial balance at TP2, and now I have a TP3, which would be 30 pips for a 1-to-3 risk reward. If price decides to hit TP3, guess what it is? Another plus 500, because each time I am partially out. But actually, it's not plus 500 this time. Actually, it's plus 250. It dwindles down. It's plus 250. Then the third time it will be plus 125 because my lot size is dropping. So plus 125 all the way until it gets watered down. So between 3 TPs, I will be, say I'll walk away with 825. Right, TP3 hit, I'm up 825 profit. Say it keeps running and it hits my fourth target and I partial out again, close another half. Now I'm plus 75. This is all secure profit versus this being my initial risk, right? Then say if price eventually comes back to entry and I get out at break even, I walk away with the whole trade with $500, $600, $700, $800, $900, right? Say price doesn't come back down to my entry and it keeps running. Guess what? I leave my trade open to make more profit as it goes on. So the reason why I always take partials off at my first trade, my first TP half, is because it is positive risk to reward. Hypothetically speaking, say I risk the same $1,000 on a trade. Price hits my first TP, I get out plus 500, and then price hits my first TP and then reverses his stop loss, right? And it just drops. That stop loss is going to say minus 500 because that's what was left that was floating, right? But if I already took off 500 profit and then I have a minus 500, this walks away as a break-even trade. So if I partial out at my first target and then price reverses on me, I end up not losing anything, and the trade just ends as a break-even position, right? That break-even position is okay. It's okay. I'd rather go break even than lose. But say I don't partial out at my first target, it hits it, and then it reverses on me. Now I just lost $1,000 when I could have broke even, right? That's why it's important to have a exit strategy and do the same thing every single time, because you don't know what the outcome is going to be before you enter, right? Every trade has the potential to lose. Every stop loss has the potential to get hit. Every target has the potential to get hit. You don't know if that's like every trading strategy has a win percentage. You don't know. Say a trading strategy has a 61 percentage out of 10 trades. You don't know when them 4 losses is going to come. Them 4 losses could come the first 4 trades, and then you win the next 6. Them 4 losses could come the last 4 trades, and you win the first 6. You don't know when they're going to come. So every given trade I take, I don't know if it's going to be a loss or a win, but I know over time I have a profitable strategy, and I win more often than I lose. So with that approach, if I do the same thing every single time, then I'm going to be profitable. No, with the stats of I win more than I lose. But if I take partial sometimes, or I hold full sometimes, and sometimes I'm letting stop loss hit, sometimes I'm holding forward to 4 TP, like it creates too much randomness in this trading strategy and your trading plan, and now you don't know if you're going to end the weekend green or in the weekend red, because you could be cutting your wins early too fast within that 6 trades, but you're letting all your losses hit TP. Yeah, letting all your losses hit stop loss, and then you take a full loss, right? So it creates too much space for randomness. It's important to do the same thing every single time, no matter what price action shows. That will help you build longevity and confidence. So is that okay to finish stop loss when it goes to halfway? Yeah, if it goes halfway, if it goes to my halfway profit point, yeah, I'm taking. Well, if it goes to my first target, yeah, I'm taking partials. And if it hits stop loss after that, I'm fine with that. Like right now, I took partials here. If prices decide to reverse and come back and stop me out, I'm fine with that, because I already took partials. It'll just be a break-even trade. So what? A break-even trade is better than loss any day. I'd rather break even 100 times than lose 5. How contracts work? For every seller contract, there has to be a buyer. For every buyer contract, there has to be a seller. So for every person that's winning, there's somebody else that's losing somewhere else in the world. Or it could be a collaboration of people that's losing all at the same time, right? So if I'm breaking even while I know other people is losing, I'm okay with that, because at least I didn't lose. At least I'm not with the other 100 niggas that just lost. Like I broke even the other day. 100 other niggas just lost. So what? Right? So there's nothing wrong with breaking even. So if I hit my first target and then it reverses on me, cool. Right? It's a part of trading, right? You're going to break even sometimes. You're going to lose sometimes. You're going to win sometimes. Right? It's just about how you manage it as those sometimes come around. How you manage your wins, how you manage your losses, and how you manage your break evens. And are you willing to break even? I know some people don't break even. Like FX Alex G, he don't break even. But that works for him. Me, I'd rather not lose, because I got pride. My pride get the best of me sometimes, and I hate doing stuff that I'm bad at. So if I know I'm losing, I consider myself bad at whatever it is. If I play a video game and I'm losing, I feel like I'm ass. I'm not gonna want to play that game no more. If I play basketball and I'm losing, I'm gonna want to quit. If I'm playing football and I'm losing, I'm gonna want to not play football no more, because I don't like being bad at stuff. So it's a pride thing. So if I lose a trade, I will unconsciously feel like I'm bad, and I'm not gonna want to trade. So any chance I get the chance to break even to avoid losing, that lets me know I can take another trade. But if I lose, it's gonna make me not want to even trade again, because I just fucking lost. Like, but that's just me personally, though. It depends on your personality, and that will shape how you are as a trader as well. See, the GA idea I had with sales below here. This we about to get a shift in structure here if we get a closure above this 1 hour lower high, and this is where the buyers will be regaining control. So my sells are now invalid. But I don't want to buy either because again, this is a big aggressive drop in the 4-hour time frame. So this buy is just a counter trend 4-hour retracement. And the thing about taking counter trend trades is you don't know how far the pullback going to be. So if I try to take a buy here, price could easily just put me a little bit in profit and then go down and make a new low, right? Or price could put me deep in profit and then come down and make a new low. Or price could just go straight and make a new high, right? You don't know how far the pullback is going to be when you're taking counter trend trades. So that's what makes them a little bit more risky. Tell me of this contract risk management. Risk management is according to however big your account is, because it's not about your lot size or your contract size and that stuff, right? It's not about if you're trading micros or minis or you're trading standard lots or whatever the case may be. It's about your account balance and how much you're risking per trade. That's risk management. So if you risking 10% of your overall account balance, that is aggressive risk management. Not necessarily bad, it's just aggressive. You're risking 50% of your account balance for one trade. Now that's bad. You're risking 100% of your account balance for one trade. That's bad. You're risking 30% of your account balance for one trade. That's bad. That is poor risk management. So it don't matter about how much your contract size is. It doesn't matter about what your balance of your account is and how much percentage that you're risking. I recommend in between 1 to 5%. Anything more than that, I consider high risk. I don't. When I talk about trading, I don't talk dollar amounts. I talk percentage base. The reason why I talk percentage base is because your dollar amount will change over time as you get better as a trader and as you accumulate more capital. But what doesn't change is your percentage base. Like what I said in the beginning, when I said your it's about being able to do the same thing over time, no matter what happens, right? So if I trade 1% over time, no matter what happens, 1% will always be 1%. But 1% of 1,000 is not 1% of 10K. 1% of 10K is not 1% of 100K. 1% of 100K is not 1% of a million, right? So the dollar amount will change over time as you get better and as you gain more capital as a trader. But 1% will always be 1%. 3% will always be 3%. 5% will always be 5%. So on and so forth. So when I talk numbers, I don't never talk money. I always talk percentage growth, because if somebody make 5% on a 50K account, that's $2,500. But somebody else make 10% on a 1K account. I'm gonna look at the person that made 10% as a better trader because they had the bigger growth in the account versus the person that made 5%. Even though the person that made 5% made more money, the person that made the lower amount of money just had less capital trade with. Meaning, if he had the same amount of money to trade with, he would have made substantially more than the person with the bigger account. So trading is just a game of scaling capital and percentage gains. It's not really a dollar amount game. And I don't want new traders to get fixated on the fact that you could make a lot of money as far as a dollar amount early on in their trading journey, and then chase that and end up losing just because they're trying to chase that big gain. When you focus on the percentage gains, the dollar amount never changes. I mean, the dollar amount doesn't matter. What's good, Cheeto? Welcome to the stream, bro. How you going so far? You taking the trades yet? Hey, Cheeto, I know you remember this EU sell from yesterday. Thanks so much. I never seen that kind of teaching in my 4-year journey. Yeah, I've been trading for about 5 years, almost 5 years now, 4 years, going on 5 years. And the way I explain stuff or how I interpret stuff, I try to tell people what I wish somebody would have told me when I was coming into the market. Like when I was first learning trading, if somebody told me to stop focusing on chasing that $1,000 a day, that $100 a day, that $500 a day, somebody would have told me to just focus on percentage gains and just try to scale capital slowly, then I would have, my learning curve would have been shortened a lot. As a trader, bro, the money's gonna come. You just gotta focus on the skill and being good at the skill first. Being good at the skill is going to generate the money. Just gotta be good. And being good doesn't mean having a good strategy, because I could give somebody else my same strategy and they're not gonna have the same results as me. Fucking ICT himself can give thousands and thousands of people his strategy, and not all of them don't make money as he does. Or fucking Lambo Raul could give you his strategy. You not make the same kind of money Lambo Raul make, right? So it's not about the strategy; it's about the person. A lot of people could put too much credit on the strategy itself and not on each individual person. How and where can you learn more? You can learn more about just being in the live stream every day. I'm supposed to be making the course, but I haven't got around to it yet, just because I'm not even gonna make an excuse. Like, I just haven't got around to it because I just didn't do it, to be honest. Like, I'm motivated to do it. But you can learn more just by being in the live stream. I got a free Discord. You could hit the Discord link in the description. That's where I post my chart breakdowns, like before and after. I also send free signals in the Discord when I don't go live sometimes. I also send video breakdowns sometimes in the Discord as well. So you can just join the free Discord if you want to. If not, that's cool too. God bless you. I'm going to practice that. Yeah, bro. Again, everything is just about you individually as a person. Like, if you unprofitable, it's probably not because of your strategy, because you probably got your strategy from somebody that makes money, right? It's probably just you. So a lot of improvement when it comes to trading is purely just getting better as a person and self-reflection. I'll turn my face cam off real quick, bro. Hold on, I'll be back. I'm gonna answer that in a second. What was the question? Why the title trading again? Have you been vacation or you leave YouTube for a while? Nah, I never stopped trading. I just stopped live streaming. I used to live stream every day. If you go to my, well, you're probably not gonna even see it. I'm about to say, if you go to my lives, you'll see I used to live stream every day, but I used to play music on live stream, so a lot of them probably got copyrighted. But I stopped live streaming for a while just because I got bored of it. But I low key want to get back. I'm low key getting back into live trading just because I want to grow my YouTube more. I took a big break from YouTube, not even on purpose, just like something I was just unmotivated to do. Yeah, bro. As a beginner, bro, trading is really gonna just test your self discipline, and test you personally. Once you get the personal stuff down, you're gonna start to see your trade. Yeah, you start to become profitable as a trader. Maybe you need maybe you need a new community. I don't necessarily say I need a new community. I just need to be more consistent and grow my community that I already have. And I think the easiest way for me to do that is to live trade and provide as much free value as possible, and that'll bring new welcoming beginners. Candles are slow FMC, no movements created. I was I caught that I was in FOMC yesterday at 2 p.m. Man, I almost got cooked. Almost got cooked yesterday at 2 p.m. from FOMC. Yeah, it's definitely real slow right now, though. I already partied out, so I'm cool. I'm just chilling, seeing how it play out. Just to get them out, I gotta hit the sack. I'll see you in the next one. Alright, thanks for stopping by the stream, man. Nice to meet you too, gang. We're gonna be live tomorrow, same time. Same time every day, London. Well, not the same time, but London session every day. It might be at 1 a.m. Might be at 3 a.m. Depending on where how I see the market at that time. But 1 to 3 a.m. No later than 3 a.m. is when I start my lives. Bro, if y'all see me falling off and not going live, bro, join the Discord at Tradaholic. Say, hey, bro, I thought you was gonna be consistent live. Hold me accountable, bro. Like, yeah, you said you was gonna go live, right? What happened to that? I'm gonna be like, damn, you know what? Y'all niggas right, bro. I'm gonna hop on a live. Are you a London trader? Yeah. So I trade every session, but it's situational. So I trade London session mainly. That's my first session because that's the first session of the day. But I take 1 to 2 trades a day. I don't really take more than that. And if I trade London, then I don't trade New York. If I don't trade London, then I do trade New York. If I don't trade London or New York, then I will trade Asia. So a situation now, I'm up for London, right? I'm up for London every day. I'm always this is my hours, right? I'm always up for London every day. But if London is slow and I have like a and it's something like this, to where like I want to buy above here, sell below here, but price never gives me an entry, and I get off, I will come back for New York and see where price is currently at, and if it gives me a setup. If it doesn't give me a setup, I'll leave and come back during Asian if it gives me a setup. Because I'm an intraday trader, like I don't need intersection volume to take my trades. I'm holding my trade for a decent amount of time anyways. But I preferably trade London session. But if I don't get a session, if I don't get a trade during London session, I'm not gonna take any given trade. If I don't get my setup during London session, I'll just come back to New York. I'll come back to New York. If I don't get my trade set up in New York either, then I'll come back for Asia. But most of the time, I'm trading London session. Like 90% of the time, I'm trading London. I take 1 to 2 trades a day. If I win my first trade, most of the time I don't take a second, depending on how much I'm up on a week. Like if I'm really up a lot percentage on a week, then I'll trade. I'll take a second trade. But if I take a loss, then I'll take a recovery trade. Guaranteed recovery trade if I take a loss. But 2 trades max. Now, it's sometimes where I break that rule and I make take 3 trades depending on how good they look or how good I'm feeling, right? But most of the time, 1 to 2 trades. So if I get my trade in London and I don't get a trade in New York, and I don't, if I get my trade in London, then I don't got to trade New York. If I don't get a trade in London, then I got to trade New York. If I don't get a trade either of them, then I'm waiting for Asia. We just hit we just hit 800 subs, bro. Let's go. W's in the chat for 800 subs, man. What time did I get off live yesterday? I forgot. Before I trade anytime, then I'm tired of losing. Before I trade anytime, then I'm tired of losing. I just put myself trade also with session. I'm more on New York. Yeah, but now, when I was, damn, I just started so hard, bro. When I was a scalper, I was strictly trading London session because I used to work down New York. But now that I've transformed from a scalper to an intraday trader, I don't really need session volume on my side for the simple fact that I'm holding longer trades anyways, right? I'm already holding my trades 1 to 4 hours, sometimes 6, 8 hours, right? I'm already in long trades, so I could trade Asia. I can take a trade during Asia session and hold all the way to London and wait for that London volume to kick in. My guy went from 2K to trading was good. Logic Flicks, you know me from 2K, bro. Who is that, bro? Like I could take a trade the Asian session and hold until that London volume kicking because I'm already holding my trade for like 4 hours sometimes, anyways. So within that 4 hour time frame, say I take a trade at 7. Say I take a trade at 7 p.m. And I hold that trade for 4 hours. That'll be coming into pre-London, and then I would use that same trade as my London trade. Or say I take a trade during London, like at 3 a.m. or 1:30, and I hold that trade for 4 hours. Then I'm coming, or 6 hours. Then I'm coming into pre-New York. So because I'm in for longer trades, I don't need session volume because if I'm holding it longer, I'll be going into session volume in the first place. I dream before to meet My dream before to be a scalper, but I realize now I don't like the hassle with being a scalper. I want freedom. Yeah, I don't like the hassle of being a scalper either. I used to play with you, bro. What was your name, bro? On what 2K? Um, my dream before being a scalper, but I realize now I don't like the hassle of being a scalper. I want freedom. Nah, yeah. The reason why I stopped being a scalper is because for one, I was taking lower quality setups because that was the move of the session, right? And for two, is because I was micromanaging my trade too much. Scalping be having you micromanaging your trade. Just because everything's happening so fast, you got to make real quick decisions. And with entries, then stop loss, you trailing stops, you doing this, you taking parts like that's. Even though I do that anyway, but I don't do that as fast, so it's not more that much of a hassle. I don't like biting my nails while I'm in the trade either. I like to just take my trade, going about my day, and come back to see what happened. Like if I wasn't sitting here on the live stream right now, live trading, before I took this trade, I'd have just been playing the game. And time would have flew by so much faster just playing the game. The next thing you know, I came back like, oh shit, I was in the trade, right? Let me see what that's doing. That's what I tell. Like when people ask me about going from a scalper to an intraday trader or day trader, I always tell them the same thing, bro. Like just once you take a trade, set your stop loss, set your TP, or people that struggle to hold a trade. Once you take a trade, set your stop loss, set your TP, and go do something. Be productive. Like if you trade in the London session, go to sleep, nigga. You gonna wake up hours later, 6, 7 hours later, and you gonna wake up. You're gonna be at TP or stop loss, either one, right? Or if you trade during the New York session, take your trade, go to the gym. Take your trade, go outside. Feel me? Go eat. Come back, then you see where your trade at. Trade during Asian session, again, take your trade, go to sleep, go get some hobbies, nigga. Do something. By the time you come back, the trade gonna be done, and time gonna go by so much faster. What game you play? I'm also a gamer, bro. I be playing Fortnite and Call of Duty. I don't play 2K no more. I used to play 2K heavy, but 2K ass now. So I play Fortnite and Call of Duty for. Like those my main games. Like on the side, like I have like side games like I play just to chill. I'm starting to play Overwatch. I just started playing that game today. That shit low key ass, but I feel like it's only ass because I'm ass and I'm not good yet. So I feel like that game, I just gotta get that game some more playtime. How does trading even work? So you completely beginner, don't know nothing about trading, Elijah. 2K19. You from New York, bro? Some. I think I know who you is, bro. Hold on real quick. Hey, KD. Hey, KD. Oh, my shit was on mute this whole time. Hey, KD. My PUBG Hey, KD. Nigga, I can like hear me talking, bro. Fuck, nigga. And fuck that gunfight. No, bro. No, bro. Bro, your name was like EJ Go Crazy or something Go Crazy, something like that, bro. Elijah. Exotic Go Crazy, some shit. Exotic. That's what the nickname was, bro. You Exotic Go Crazy, bro. If you Exotic Go Crazy, you funny as fuck, bro.
Huh.
You said you complete beginner trade, like you don't know nothing about trading. Okay, so the different kind of financial markets. You have forex trading, you have futures trading, you have crypto trading, you have stock trading. Those are the different financial markets, right? All of them move the same way. All of them have the same price action. You have options trading, right? Um, with forex trading, we trade what we call
Mm.
lot sizes, right? That's how much we make or lose
They're
per
fucking
pip,
stupid.
right? I'll get to pips in a second. Um, for futures trading, they call them points. Um, and they use contract sizes. For options trading, we buy or sell.
Got niggas below.
For options trading, they call it for buy instead of saying buy and sell, they call it calls and puts, or long position versus short position. Long position is buys, short position is sells. But in a nutshell, you're buying a contract. So if I'm in a buy position, I'm buying a contract at a designated price point, and as that price point gains value, if I sell it at a higher value than I bought it at, and I make money according to the difference that it moves, based off of how much lot size I use, right? So, say I use one standard lot, that's 1.00. That means for every pip that is $10, every pip is worth $10, right? And a pip is just what we say, or our terminology for unit of measure. So right, for in real life, we measure with feet, yards, inches, centimeters. That's how we measure movements or distance. So as far as everything that's happening on a chart, we measure the distance from this number to this number by what we call pips. So one standard lot is just $10 per pip. So if price drops from here, from this number right over here to this number right over here, that is a total of 18 pips. So if I was to take a sell and price went from 18 pips from my entry, then at one standard lot that would be $170. If my math is mathing, 17 times 10, 170. No, 17. Hold on. Is my math not mathing, bro? Yeah, 170. My math is mathing. I'm tripping. So that'll be $170 in profit. So basically, you buy. If I'm in a buy position, I'm buying the contract.
Motherfucker.
Not physically buying the contract, but electronically buying the contract at one value and trying to sell it at a higher value to somebody else that would have bought that same contract. And you're not selling to a physical person. Everything is tracked through a brokerage, or being the broker, the middleman, meaning I send the orders to the broker. The broker execute the order, and then whenever I want to sell, I let the broker know I want to sell, and then they cash out whatever I make off that sale, or whether I lose, right? So if I buy it at something at $1, and then it drops in value to 50 cents, I overall lost money on that exchange because I sell it at a cheaper value than I bought it for. If I buy something at $1 and it gains value to $2, like Jordans, right? If I buy a Jordan at $200 and it goes up in value to $400, I sell it at $400, I made $200 profit, right? Same exact thing. Right? You buy a contract and you try to sell it at a higher value. You sell a contract and then try to sell it, and then you sell a contract and then try to give it to a buyer at a lower value.
That's like, what is that?
That's ideally what it is, in a nutshell. For all of them, like futures, some futures markets, something like NAS 100, ES, MNQ. Those are like some kind of pairs or names you want to call for the futures side of trading. Got FOREX, which is what I'm trading right here, which you see on the screen. FOREX is just an abbreviation for the foreign exchange market, right? That just means I'm trading the exchange rate between two different economies' currency. So in this case, this is Euro USD. So this is the Euro dollar compared to the US dollar. I'm trading the exchange rate between these two different currencies. This number you hear is the exchange rate. So for every 1 euro is equal to 1.146764 US dollars right now. And this number
Like
changes
your voice
throughout the day,
sounds so
every single
weird
day.
having this headed.
Um, so
And I'm talking to
say
my man.
hypothetically speaking, you go to a different country like Mexico. You're not going to spend US dollars in Mexico. They're going to give you the Mexican peso. That is a foreign exchange. You're exchanging your currency for that country's currency. Basically, for trading forex, you do that, but electronically, just betting if price is going to gain value or lose value compared to the other currency. That's basically what it is. But my job as a trader is try to predict where price is going to go from wherever I decide to enter at, whether it's going to gain value or lose value, and I make or lose money on the difference. The way I do that is by what we call technical analysis. The charts make form patterns, and my job is to identify those patterns and execute to form an idea of where I think price is going to go, and take trades based off of that. There's more technical stuff that go into it, but that was like in a nutshell. That was a long ass nutshell, but you get the point. What's that noise? You hear a noise? Hold on, I don't know what you hear. Let me see what you hear. Mic check. What noise you hear? Mic check. Mic check. I don't hear no noise, bro. It's like rain. You sure, bro? Hold on. Let me turn my desktop audio back on. Mic check. Mic check. No, yeah, I don't hear shit. Let me play it back in the chat. Oh, I did hear it. But now that I transformed from a scalper, it's just I'm trading from an idea. But I was doing that this whole time. My second, the more I've put 5%. This whole that wick is. But now that I transformed. I didn't know that shit was doing that this whole time, bro. Mic check. Mic check. Is that shit still doing it?
Hey, yeah,
Let me see. Right. We should be good now, I think. It should sound more clear. I was using the wrong mic this whole time. That's why I wasn't using my dedicated mic. I was using a different mic. On the mask. Ugh. I think I'm finna get off here. I already took partials out this position. Chose stop loss. Stop loss get hits. Oh well. We still I'll still end the trading profit if stop loss get hit. So I ain't even tripping. What's good, Chris? You come in as soon as I'm about to leave, bro. Should I stay here for 30 more minutes? I think it's about that time, man. How long I've been live for? Let's see. 2 hours? Oh yes, it's a wrap. It's a wrap for me. Thanks for everybody that stopped by the stream, man. Thanks for the new followers. Thanks for the new subs, bro. We just hit 800 subs, bro. Let's get it. 801 to be exact. I did not think I was going to hit 800 subs today, to be honest. I thought it was going to take like a fucking long time, bro. I not expect to see this many new people in the chat for the past couple of days either. Got a lot of new people. It's your boy Tradaholic though. I'm gonna wrap it up here. It's a little trade recap. We got an EU sell. Risky sell just because it's counter trend. This is our trade from yesterday, our EU position from yesterday that's running deep in profit with a runner. This trade is still running as well. I already took partials at my first target, which was this low right over here. Took some partials. I didn't show stop loss to break even. I'm still holding stop loss. That way, if price just reversed, I'll just get out the trade. But technically, this is my most recent lower high. So if this lower high gets until this lower high gets taken out, I'm technically still bearish on the trade idea. Other than that, I'm gonna wrap it up here, man. One trade today. That's all it takes. It's your boy Tradaholic, and I'm out, chat. Peace.